Hello, hello, hello. Is this thing on? Is this on? Can you guys hear me? I'm seeing some people pop in here. I'm gonna get started here in just a minute. I'm gonna wait just a minute, just to see if we get a couple more people in here. Gosh, the things that I want to talk about today, what I will really want to talk about are the global markets, and I want to take a look at things from a high time frame perspective. I'm going to be taking a look at the S&P. I'm going to take a look at Nasdaq. I'm going to take a look at Bitcoin. I'm going to be looking at the dollar index. I might be taking a look at gold. I'm going to be taking a look at quite a few things here, and I think they're all very, very important. And I do believe that this is going to be a very worthwhile video. It's going to be something that don't do very often, but I think it's totally going to be worth it. And yeah, I'd like to have you here for the duration. But of course, we talk about a lot of these things in the Discord. And if you want access to our Discord, just throw a comment in the YouTube chat, and I will be more than happy to get an invite code out to you. So let's go ahead and get right in here. So first off, I do want to take a look at the S&P 500. So Sacred Order was talking about something in our traditional channel. And what he was kind of pointing out was this broadening wedge theory, which is valid. It's valid. Basically what he was saying here is we've got, from this low here to this low here, and then also we've got, from here, we've got this sort of broadening wedge. Yeah, I could see that. I could see that. But what I want to focus more on is from this guy right here, pulling myself all the way out to here, and then from there we've got from here pulling ourselves this way. Now, obviously, one could say that what we had right through here was a trap. Okay, I think that was a little bit of a trap. I think that obviously we had, a little bit of euphoria there, and we got a good pullback. So what I can see an A, B, C overextended here into the D, and then down for the E, and then we would technically go up from here. And so far, that's what we're doing. All right, so it's easy to see that this is what's potentially happening here. We have an overthrow, a pullback down to the bottom of this channel, and then we move up. Let's take a look at the S&P on a weekly time frame. This is, gosh, it really looks just like nothing compared to the rest of the price history. Obviously I'm on a log scale. If I go back to a linear scale, obviously it looks a little bit different, but we can see here on a log scale, looking here at the weekly chart, looking at the S&P back to about 1970, right? Things have been really, really good, and I think we are entering a chop phase, right? I am still of the opinion that we will likely move up, right? We've talked about this, we've discussed this in great detail. Go back and take a look at some of my recent S&P videos where I'm taking a look at ES1. You can see that I have projections taking us up to somewhere between 3,700 to 4,000 over the next couple months, and I have some more data to back that, which I will be discussing here in just a little bit, so stay tuned for that. But nonetheless, it's very obvious that this is a correction right here. We did correct whatever finished here was corrected. Okay, it's very clear here that this was a correction. We have an A, we have a B, and then we have a C to come down here. And then basically from there, again, what I will go ahead and speculate from this move here, very clear for us to see that we've started an impulse. From down here, we've got a nice 1, 2, 3, 4, 5. We go down here for the 2, so this would be a 1, 2, 3, 4, 5. Okay, So we've got this. Let me move this to a lower degree because I think that move completed, and I think we are in expanded flat territory. So again, from here, I can see this as a 1 and a 2 and a 3 and a 4, and then we've got a 1, 2, 3, 4, 5 to complete that move. Okay? Now, just because I think that move right there completed doesn't mean I don't think it can't go up, because I do think it can. I think it can, and I think it will. But I think what we're going to likely do is going to be moving into an expanded flat scenario, which is going to take us higher. Again, we've talked about this. If we take this right here, and let me just pull in some of our targets that we would have to the upside. All right, so we've got, let's see here. There's the 1, 2 sets here. I like the 1, 2, 3, 6. Another one that I like to pay attention to is the 1, 382. All right. So an expanded flat would take us up likely into this range to the 1, 2, 3, 6 or the 1, 3, 8, 2 to get an expansion to the upside. All right. The time it takes, I'm still talking, we're probably looking at November, maybe December, somewhere in that frame. I mean, maybe we even go all the way into, August, or July, June of next year. It's still undetermined how long it's going to take for this thing to play out. But what I do think is I think we get up here into this expansion. I think we get an expanded flat, then we're probably going to end up coming back down. Maybe not quite as low as 2189, like where we ended up at the end of March, but I can still see us kind of moving back down here and retracing that move and just getting us back down there. So we'll take that as it comes. But one of the reasons why I do have to be a little bullish on the market, let me talk about why I'm bullish on the market. And I'm going to take a look at the dollar index. So I'm going to take a look at DX, US dollar index. And we've talked about this for quite some time. We've been discussing this, and how I believe we're likely to see, a drop on the US dollar. And we have seen that so far. So far so good, right? So far so good. I think that we've got this falling wedge. I'm looking at the weekly chart. So we're looking all the way back here, the bottom of this starting in 1992, and we had a strengthening dollar. And to be completely honest, this went through, regardless of what your political affiliation was, when Democrats were in control, when Bill Clinton was in control, that started, this move to the upside. And then, of course, went all the way through where basically we got to September 11th of 2001. And then we had a sharp decline all the way. It lasted all the way until the mortgage crisis in 2008. And from there, we saw, a bounce back. The dollar was strengthening. And now we're again at that point where the dollar is losing value. It's losing value. For weeks, the US dollar has been losing value against other currencies. Okay. Now, we've analyzed this on in the insured area on the Discord, so this should be no surprise to you, that we have seen, a 1, 2, 3, 4, 5, and then we go up here to correct that move, and then we're seeing a sharper downside movement. Now, as the US dollar is devaluing itself because of quantitative easing, repos, buying treasuries, whatever the treasury is doing that is devaluing or inflating the currency. If there are 100 $1 bills out there, then all of a sudden I print 100 more $1 bills, then you're just going to have a decrease in what that dollar can buy you, because it's going to cause inflation. And so we're starting to have this devaluing of the US dollar. I think it's going to continue. I have no reason to believe at this point that this is going to increase. We are constantly seeing more and more money being printed, and that is going to devalue the US dollar against other currencies. And it could be other currencies, it could be gold, silver, Bitcoin, whatever it may be. It is going to cause those to increase in value against the US dollar, because US dollar is becoming more and more undervalued, or devalued rather. I think the US dollar is going to see kind of a shift where the US dollar is not going to be the global reserve currency. That's likely going to shift to something else. But for a while now, this goes all the way back to mid-March, right? In mid-March, um, Bitcoin took a nosedive, while at the same time the US dollar was strengthening. Okay, so this is important. We're looking at correlations. Now, how are these things correlated? And in this case, when the US dollar is strengthening in value, we should see other safe havens devaluing. And that's exactly what happened. We all know that Bitcoin dropped down to, $3,800, $4,000 in mid-March, while the US dollar was strengthening in value. So, you've got some naysayers out there that are like, well, it was just some big whales that were just dumping their Bitcoin, and that's what caused the price to drop. I would agree with that, but I would also say that the US dollar was strengthening in value pretty significantly at the time, and so far it has been devaluing. And what has Bitcoin been doing? Bitcoin has been increasing in value while the US dollar is decreasing in value against other currencies. You have to take a look at the global picture, and more times than not, you will see correlations. Also, as the US dollar is devaluing, stocks are going up. Why is that? Well, we're printing all this money, and it is causing, it's causing these stock prices to go up very, very disconnected from reality. It is what it is. I believe that the stock market is probably going to continue moving up. I think there will be a pullback, but I do think it's going to continue rising. I think the correction, at least for now, is done. That 2100, 2200 on SPY, or the S&P 500. I think that was the bottom for a while. I think that we're going to enter sort of a choppy phase here in a little bit, but I think that that this is also going to continue a devaluation, which is going to be very good for things like silver. XAG silver has been increasing in value significantly. And let me go back to a daily time frame. I've been taking a look at this. I kind of expected the 5 to be here, and I thought we were going to be correcting, but we actually went up a little bit higher. It's been a while since I've taken a look at this. I believe it was probably here, which was on July 30th, the last time I took a look at silver versus the dollar. It just continued to go up. Again, I think that this is getting close to being finished. We did hit an algo target here. We have overextended. The next target technically would be all the way up here at about $33, $34. So it wouldn't surprise me one bit for us to realize that target sooner than I was expecting. I wasn't expecting this to happen until mid to late September. But it's just been continuing to increase in value. Gold, we've seen that increasing in value. XAU gold has been increasing in value. So we'll take a look at that. Gold increasing in value. This is also one which is, starting to see some new highs here, breaking $2,000. And if we go all the way back to the last high that we had, which was in September of 2011, we topped out there about 1920, and now we're sitting at 2031. So we're seeing higher prices on gold. Where do I think gold is going to land? Well, let's just take a real quick look here. Whether you like gold or not, I think it's good to take a look at things and kind of get a feel for what the market is going to do. So let me just take this off of log here. This goes only back to 2006. Let me see if I can get something that has longer history, potentially on, let's take a look on ICE, see what kind of history. There we go. This looks better. Monthly chart, here we go. This is the moneymaker right here. Going all the way back to 1976. Let's take a look at this guy, because we've got a nice impulsive move up. We've got a correction. We have another impulsive move up and a correction, and now we're starting to see a move up. But let's just take a look at this, how long it took for this to correct. This took a long time to correct. I think gold potentially is in an expanded flat in itself. We've been talking about this on the S&P. Very likely this is an expanded flat. So let's just take a look at this guy. So if we take our trend-based fib extension, which we take all the time, go down here to the bottom, dominant pivot to the high side, do the pullback, where would we or should we expect wave 3 to head? We would expect wave 3. No, this doesn't look right. Let me get this off of log scale, move back to linear scale. So this looks, yeah, actually this does look better. So if this is a 1 and a 2 here, then we've got the 3 up here, pull back for the 4, and then our wave 5 target. Let's take a look at this guy, pull him here, go down from the dominant pivot bottom to where our projected wave 3 is. We came back to the 50. So yeah, this looks good for a move up to maybe 2275 to 2300. So I do think that gold has a little ways more to go. Probably another $300 gold has to go. Seems like that is an ideal target for gold to go to. I think gold is going to enter a chopping phase. Really ideally it would retest somewhere between 1800 and 1950 before it continued up to realize that target. So I would kind of expect something like this to happen, a little bit of chop here, and then move up, hit that target. I'm looking at a monthly chart. This literally takes us all the way out to 2023. Maybe that's not worth it to you. Gold did appreciate in value pretty significantly, but that ship kind of has already sailed. So that's going to be up to you whether or not you're going to buy and hold gold up here above $2,000. We're making new highs. Are we seeing any divergence? Let me see if I can get this condensed a bit so that we can just take a look at the RSI. So let's remove, I want to keep that. Let's take off the 3, the 12, and let's just take a look at this. So far, we've got this high. We're actually not creating divergence on a monthly chart, which is pretty good actually, for there not to be any divergence. So for now, yeah, I do think that we will probably consolidate up here, make that move up to 2300. From there, we really can't tell. If we want to measure wave 1 and project it from the bottom of wave 4, which again we're talking about right here. Yeah, that's still coinciding with that 2300. So I'm going to continue to say gold's probably going to go to 2300. So that's what I'm going to say there. Now, what I know that all you guys are here, let's take a look at Bitcoin. We're going to take a look at on BLX. Nice, steady data here. We're going to look at this on the monthly chart. I'm going to go to log. Okay, so what we've got, obviously we've got an impulse here. The question that I have had for the longest time is this a 1, 2, 3, 4, 5? If this is the 5, we should be, we should be still seeing this $2,000 target. So, where I get concerned is with the fact that we have gone up so far, but honestly, the risk versus reward here is, and I hate to say it, but it's really in favor of shorts at the moment. Unless we can overtake 13,000, I think that, we've been talking about a target of 12,200 for a while. I've been discussing that for a while, and we did almost hit that target. We got pretty darn close. We got up to 12,104.88 here on the BLX exchange or the index. So, I'm still cautious up here. It seems like there's way too many people that are making way too much money right now for us to really see, more upside. And yeah, I do think we are going to get some upside because we have to generate a little FOMO. I will agree with that. I am bullish on Bitcoin, contrary to some of the statements that I have made. Saying that, yeah, we have to come back down here to 2,000. We have to come back down here to 1,500. I don't know. But, I don't want to get too caught up in, being overly bullish when we are, approaching the top of this Bollinger Band again, right? So we tried breaking through this Bollinger Band 1, 2, 3 times, the monthly to the upside. Even though we had this massive move here and we have had a massive move here, we're still contained inside of this, and actually volatility is decreasing. So we can see this lower band is contracting. The upper band is still moving up steadily, but the lower band is contracting, and kind of significantly, to be honest. So our Bollinger Band width on the monthly is decreasing. If we take a look at the weekly here, we're at the bottom. I'm sorry, not at the bottom. We're at the top of the band. We're trying to continue to push through. This is, from yesterday's or last week's close, 11,771. So there's still data from today that is still unrecorded. We can take a look at this, 11,771.41. That was the daily close from yesterday, which was about 2 hours ago. I have to say that, this level right here, we probably are going to raid that. I still think that we're probably going to get a pullback, and I am not ruling out a move back here into this range. It wouldn't surprise me if we came back down here. Looking at the daily, we tested the bottom Bollinger Band here, here, and this Bollinger Band is sitting down here only at about 8,900. We don't talk too much about moving averages anymore, and I need to get back in the habit of taking a look and watching these moving averages, because they do tell a tale, and they do tend to be pretty informative. So take a look here at the daily. We consolidated here around the 21 exponential for a while. We haven't tested that daily, here recently. If we take a look at the weekly, we broke up above the 21 exponential. We've held above that also, and that's sitting at 9,300. Just taking a look down below, everything is looking very, very bullish. One thing that I can say here, looking at the weekly, okay, let's take a look at the weekly and go back into the past. When you had the 200 simple and the 200 exponential. So the 200 simple moving average is this red moving average. The 200 exponential moving average is the purple moving average. When you saw a cross on that, right, when the red went above the purple, that was a pretty bullish sign. And we saw the price, as that happened, we came back down and we retested that, okay, after it crossed. Like you can see before then, we came down and we retested that, and then we consolidated above the 200 exponential, and after it crossed, we had a retest of that 200 exponential moving average, which right now is at $6,400. And then we saw a spring off of that. We moved up. We got back up above the weekly 21 exponential, the weekly 21 exponential, and we saw this massive rise. Now, after we saw the exponential cross above the simple moving average, the price just kept on going, right? The price kept on going. But the point I'm trying to make here is, when we saw the simple move above the exponential, we saw a pullback, almost the week after, right? So we're talking right here, we had a nice 14% week, and then we had the cross, and then we had an 11% pullback. And then we had, a little bit of a bounce, but a significant pullback that took us back down here to this level. It's possible that happens again. If we get back down here to this level, guys, don't be afraid. Don't be afraid to buy spot. I wouldn't be looking for leverage on a high volatility move such as that, but we have the bottom of the Bollinger Band right there. And let me just pull this up and we can take a look where that bottom Bollinger Band is. Bollinger Band, let's see here, we have our, let's see, I don't actually have the exact price on there, but it is right around 6,000 to 6,100. And that coincides with, right where our 200 simple and 200 exponentials are. Now, we've retested this numerous times. We tested it here, we tested it here, we tested it here. We actually went down almost to the 300, right? So I put this on here just for visual purposes. We got almost down to the 300. I believe that's the 300 simple moving average. So let me just take a look here. The 300, yes, that is the 300 simple moving average, not the 300 exponential. I threw that down there just so that we can see that. And that was sitting at 37.91, and we got down as far as 39.41. So one could say that we retested the 300 simple moving average, which is something that we have not done on a weekly chart ever. Okay, not even back here. I'm sure it was close, right? If we were to create an imaginary line over here, I'm sure it'd be pretty close. But I would say this is a valid test of the 300 simple moving average. Are we going to do that again? I doubt it. I think that was probably it. That was probably it. You know, I could be wrong. I could be wrong. But I think that that likely was the last time we're going to see prices that low anytime soon. I do think that we are in the midst of the beginning of another rally here. So likely a pullback is going to be in front of us. But again, just one more thing, and then I'm going to go ahead and end the video for today. I want to take a look from the bottom here to the top here, and then a pullback, and see where this could keep going to. Because again, we already pushed through our first target, and you could see we had resistance here. There was resistance here. This is about a 9,900. We had resistance here. We finally pushed through it. And if we continue moving up, I still think that we can see upwards of 17,000 to 17,500. I don't think we are going to finish pushing through and creating all-time highs. Now, I could be wrong. I could be way, way wrong. I am interested in buying a retest of 10,000 and taking this up to 17. From there, I do think that we get a significant pullback. Things are looking very toppish. If I take a look at the weekly on Bitcoin, let me take a look at weekly on Bitcoin on Stamp, BTC USD on Bitstamp. On the weekly, I've got a lot on here. I'm actually going to clean this off because I don't think I have anything. Let me go down here just to make sure I'm not removing anything that's really valuable. Let's see here. Yeah, so we just did a retest of 12K. That's nice. The hourly is overextended, but I want to take a look at the weekly here. The weekly here, you know, we haven't really created any divergence. I'm going to remove that for the time being. We haven't created any divergence yet. We did have a buy signal a few hours ago. I think it was about 7 p.m. Eastern time, so an hour before the daily close. We did get a little bit of a buy signal. So we are seeing the price move up, obviously. I haven't seen any signs of bearish divergence here yet. If I go all the way back here, we can see yeah, we see the RSI is continuing to rise. It is higher than what the RSI was back here when we saw this rise. And as far as creating bearish divergence, I'm just not seeing it yet. I'm not even seeing any signs of hidden bearish divergence or anything like that. So for now, this remains looking bullish. So I am not planning on shorting the market anytime soon. I would be interested in taking profits though. So if you are in any positions and you are in significant profits, I would suggest not necessarily selling, but I would highly suggest that you take proper risk management and set some stop losses. I know some of you don't really care for stop losses, and that's okay. But I would argue that if you don't have a target where you want to sell, right? And I'm specifically talking about Jay on the Discord server. He is a very special person, and he trades in a way that is unlike a lot of people that I know. But he has a target for selling, right? He wanted to sell Chainlink at $10.50. That was his target to sell. When it got there, he sold a little early. That's okay though. He was happy with his profit. That was his target. I think where a lot of people get lost in is they buy something and it appreciates in value and they never know when to sell. And if you don't know when to sell, I'm telling you right now, if you don't know when to sell, you have to set a stop loss. Unless you have a target that you are aiming for, like for instance, I'm looking for Bitcoin to go to 17,000 to 17.5. So any spot that I own is going to be waiting for that target. And I will have a stop loss as the price continues to move up. I will move my stop loss up a little bit. Maybe I'll get shaken out, and that's okay. I'm interested in making profit and then getting out. But again, I'm going to say it one more time. If you don't have a target for selling, take proper risk management and set a stop loss. If you're not experienced enough to know when to sell, you have to set a stop loss so that you can get out. Maybe you want to aim for a 25 or a 50% trade. You know, put that in there and have a target. But if you don't know when that target is, or you don't know where that target is, set a stop loss so you don't end up losing. If you're up 100% on a position and then you give 70% of it back to the market, and then when you're only at 30% profit left, you sell, then you say to yourself, gosh, I should have sold back then. Why didn't you? Well, more than likely it's because you didn't know when to sell, because you don't have the knowledge. And I'm not saying this to be overly, I don't mean this to sound derogatory or negative in any way, but if you don't have the technical backing to be able to position yourself to sell at a technical target or a psychological target or whatever that may be, if you don't have a plan to sell, set a stop loss and give yourself plenty of wiggle room, because as you know, the market moves wildly in this atmosphere. So, give yourself some wiggle room. Maybe give yourself 3%, 4%, 5%. Just continue moving it up. As the price goes up, continue moving up your stop loss. That's the best non-advice that I can give you. Just practice proper trade management as you're placing your trades and just managing your positions. Let's see here. Is there anything else that I thought was good to discuss? I think that was it. So I'm going to go ahead and end the video for now. So if this video did help you in any way, shape, or form, like, subscribe, share, all that. We had a good little group of people here watching live. And of course, if you want access to the Discord, just throw in a comment in the YouTube chat, and I'll be more than happy to get an invite code out to you. And of course, wherever you are in the world, I hope you're having a good day, a good night, a good evening. Stay happy, stay healthy, and take care.